All right, welcome back to the deep dive. Today we're taking a close look at something that could be pretty impactful if you're a commercial property owner, especially here in Indianapolis. 1031 exchanges.
Yeah, we're going to break down how they work, zero in on the Indianapolis market specifically, and uncover some nuances that might not be obvious at first glance.
Okay, so imagine this. You own, let's say, an office building or a retail space. It's done well, appreciated nicely, but now you're thinking, what's next? Maybe you want to upgrade to something bigger, something more modern. Or you want a totally different type of property, something with better cash flow. Maybe you're just thinking long-term about wealth building. The big question is, how do you make that move without a massive tax bill?
And that's where the 1031 exchange comes in. It's named after a section of the IRS code, and it lets you sell an investment property and then reinvest the proceeds into a like-kind property and potentially defer those capital gains taxes.
So it's kind of like a rollover, but for real estate investment.
Exactly.
Now, just to be totally clear, we're not talking about your personal home here. This is specifically for folks who own commercial properties. Office buildings, shopping centers, warehouses, that kind of thing.
Right.
It's all about growing your wealth strategically and not losing a big chunk of it right off the bat to taxes.
And those taxes can really add up. When you sell commercial property, you've got federal capital gains tax, which could be 15, 20%. Then you've got depreciation recapture, that's another 25%. And then on top of all that, there's Indiana's state tax, which is 3.23%.
So if you're looking at, say, $1 million gain,
You could be looking at $250,000 or more in taxes, easy.
yeah, that's a serious chunk of change. And that's the beauty of a 1031 exchange. It's about keeping more of that money working for you, not for the government, at least not right away.
Right. And to really dive into this, we're tapping into some great insights from a guide featuring Cara Conde. She's a real powerhouse in the Indianapolis commercial real estate scene, and her perspective on these exchanges is super valuable.
So let's get down to the basics. What exactly is a 1031 exchange in simple terms when we're talking about commercial property? How does it work?
So a 1031 exchange is basically a legal way, it's right there in the IRS code, to keep the investment momentum going. You swap one investment property for another like-kind property, and by doing that, you can put off paying those capital gains taxes that usually come with selling a property for a profit. It's all about reinvesting, not cashing out and taking that tax hit right away.
Okay, so I get the reinvestment part. But that term like kind, does that mean I have to swap, say, an office building for another office building that's pretty much the same size and value?
Actually, that's a really common misunderstanding. Like-kind is way more flexible than people think, especially when it comes to commercial real estate.
Really?
Yeah, it basically means you can exchange any commercial property that you're using for investment or business for any other commercial property used for the same purpose. It doesn't have to be the same type of property at all.
So give me an example. What are some commercial properties that are really different but could still work in a like-kind exchange?
Sure, think about this. You could trade a parking lot that you own for an apartment complex. Or you could swap a retail strip mall for an office building, even undeveloped land, as long as it's for investment. You could exchange that for a fully developed warehouse. It's surprisingly open-ended.
So there's a lot of strategic leeway there. Are there any types of properties that are definitely off limits for a 1031 exchange in the commercial world?
The main one is personal use properties, so you can't swap your commercial building for, say, your primary residence and expect it to fly. And the property you're selling and the property you're buying both have to be in the United States. You can't do a 1031 exchange for a property overseas.
Gotcha. Earlier you mentioned the tax deferral magic of a 1031. What exactly are we deferring here? Is it just the federal capital gains tax?
It's more than just federal capital gains. You can defer those, but also the taxes on any depreciation you've claimed on the property you're selling. That's called depreciation recapture. Plus, you can even defer any state income taxes that would be triggered by the sale. So it's pretty comprehensive.
So it's not that those taxes disappear. It's more like hitting the pause button on them.
Right, exactly. You'll eventually have to pay those taxes when you finally sell the replacement property, unless you roll those proceeds into another like-kind exchange. It can be an ongoing cycle.
Now, I know there's not just one type of 1031 exchange.
Yeah.
What are the main ones that someone who owns commercial property should know about?
Okay, so there are four main types. The first is a simultaneous exchange. This is where you sell your old property and buy the new one all at the same time. It sounds simple, but it's actually really tough to pull off with commercial real estate deals because, well, it's hard to perfectly coordinate two large transactions.
Yeah, trying to close on two big commercial properties on the exact same day, that sounds like a recipe for stress.
It definitely can be. So, the most common type, especially for commercial properties, is the delayed exchange.
Okay, how does that work?
You sell your current property first, and then you have 45 days, this is key, 45 days to officially tell the IRS about the potential properties you're looking at to buy. And then you have a total of 180 days from the sale to close on the new property. Those deadlines are super important.
Wow, so the clock is ticking.
It is. Then there's the reverse exchange. This is a little trickier, but basically, you buy the replacement property before you sell your current one.
Why would you do that?
It's helpful if you find your dream property, but your current one hasn't sold yet. It does usually involve a third party and can be a little more complicated and costly, though.
Interesting. So it's about being opportunistic and acting fast.
Exactly. And lastly, there's the improvement exchange. Sometimes it's called a construction exchange. Here, you use some of the money from selling your property to make improvements on the property you're buying.
So you can actually build or upgrade the new property with the proceeds.
Yeah, but it has to be structured very carefully, and there are specific rules and deadlines about how you can use that money for improvements.
Sounds complicated.
It can be, but it can be a great way to add value if you do it right.
We've touched on this a bit, but are there any unique things to consider or maybe higher risks involved when it comes to 1031 exchanges for commercial properties compared to residential investments?
Definitely. First off, commercial real estate deals often involve a lot more money. We're talking bigger numbers, so the potential taxes you're deferring are bigger too.
Makes sense.
Also, commercial properties usually have leases in place that you need to really dig into and understand during the due diligence process. Zoning and environmental stuff can be more complicated too. The stakes are just higher.
All right, so this is not something to try at home without expert help. Let's switch gears and talk about Indianapolis specifically. What makes Indianapolis a good place to do a 1031 exchange for commercial property? What's special about the market here?
Well, Indy's got a really strong and diverse economy. Tech is booming, especially with companies like Salesforce having a big presence here. Then there's the whole logistics and distribution industry with hubs like FedEx. And our manufacturing base is solid. All of that drives demand for different types of commercial properties.
So it sounds like there are plenty of opportunities both for selling your current property and finding a good replacement property for the exchange.
Right. Plus, the population here is growing, which also fuels demand for office space, retail space, industrial facilities, and even definitely. Downtown is seeing a lot of revitalization, with older buildings being transformed into modern offices and mixed-use spaces. Suburban areas like Carmel have a lot of those Class A office buildings attracting corporate tenants. And the areas around the airport and along major highways like I-70 are hubs for industrial and logistics businesses. It's a pretty diverse market, which gives you more options for finding those like-kind properties.
So how does Indianapolis stack up against those super expensive coastal markets when it comes to affordability?
Indianapolis is much more affordable. The price per square foot is significantly lower here.
So you can get more bang for your buck.
Exactly. You can often get a bigger or a better property in Indy for the same price as a smaller property in, say, New York or Los Angeles.
So that lower cost, combined with the tax deferral, makes it really attractive for investors.
Yeah, and we also tend to have good capitalization rates here in Indy. That's a measure of the potential return on your investment. Those rates are often above 6%, which is really good for investors focused on cash flow.
Are there any particular neighborhoods or areas in Indianapolis that are hotspots for 1031 exchanges right now?
Well, a few come to mind. Broad Ripple, with its mix of retail and residential, offers good opportunities to exchange, say, a retail property for an apartment building or a mixed-use development. Carmel's Meridian Corridor is still a strong area for office building exchanges because it's got high occupancy rates and lots of corporate tenants. And then you've got up-and-coming areas like Westfield with new developments that are more affordable. It all depends on what you're looking for.
And this is where having an expert like Cara Conde on your side really makes a difference, right? Someone who knows the local market inside and out.
Exactly. She knows which areas are growing, which property types are in demand, where you might find undervalued properties. That's super valuable.
Okay, so we've talked about why a 1031 exchange in Indianapolis could be a smart move, but what about the process itself? What are the actual steps involved? It sounds pretty complex.
It does involve multiple steps and a lot of specific requirements. It's definitely not a do-it-yourself kind of thing, but we can break it down. The first step is strategic planning.
So what does that involve?
This is where you figure out your investment goals. What are you hoping to achieve with this exchange? More cash flow, long-term appreciation. Do you want to diversify your portfolio or maybe move to a different area? You also need to put together your team. This includes a qualified intermediary, or QI. They're crucial because they legally hold the money from the sale of your property, a tax advisor to make sure you're following all the rules, and of course, a commercial real estate expert like Gara.
So it sounds like she's involved from the very beginning.
Oh, yeah, her role in this planning phase is key. She analyzes the value of your current property and helps you understand what your options are in the Indianapolis market based on your specific goals.
So it's about making a roadmap, figuring out where you want to go. What's the next step?
The next step is listing the relinquished property, which is the property you're selling. Marketing a commercial property is different from selling a house. Kara's got a deep understanding of the market and can help you determine the best price. She's also got connections with investors so she can find qualified buyers quickly, which is important with those tight deadlines we talked about.
Time is of the essence. What happens to the money once you sell the property?
This is super important. Sale and proceeds handling. The money from the sale goes directly to the qualified intermediary, not to you. You can't touch that money yourself. If you do, you could lose the tax deferral. Kara works closely with the QI to make sure everything is done by the book.
So the money is safe and sound with the QI, and now the clock is ticking to find that replacement property. What's next?
Yes. The next step is identification of replacement properties. You have 45 days from the date you sell your property to give the IRS a list of potential properties you might buy. There are rules about how many properties you can identify. The most common is the 3-property rule, which means you can pick up to 3 properties no matter their value. Or you can use the 200% rule. That means you can pick more than 3 properties, but their total value can't be more than twice the value of the property you sold. Kara is really proactive here. She knows the Indianapolis market so well that she can help you find suitable properties really quickly.
45 days seems like a pretty tight window for such a big decision.
It is, which is why it's so important to work with someone who knows the market, understands your goals, and can act fast. Once you've identified those potential properties, the next stage is due diligence and negotiation.
This is where you really scrutinize the potential properties, right? Make sure you're making a good investment.
Absolutely. Due diligence for commercial properties is thorough. You're looking at inspections, lease reviews, financial history, the whole 9 yards. Kara is a pro at this. She'll help you negotiate the best purchase terms and make sure everything aligns with your investment strategy and the IRS rules for the 1031 exchange.
And then you've got to actually close the deal on the new property, right?
Yep. The 6th step is closing the replacement property. Remember, you have 180 days from the sale of your old property to complete the purchase of the new one. Kara oversees the whole closing process. She works with the title company, manages the escrow, and makes sure the money gets transferred from the QI to the seller without any hiccups.
So once that's all done, you've got your new property, and you've deferred those taxes. What are the benefits once the exchange is complete?
Well, the most obvious benefit is the tax deferral. You've kept that money working for you instead of giving it to the government. But it's more than that. A 1031 exchange can help you get a property that better fits your investment goals. Like the guide mentioned, someone might sell $1 million retail space and use that money to buy a $1.5 million office building, potentially deferring a couple $100,000 in taxes and maybe even getting a better cash flow.
That's a great illustration of the strategy in action. So let's talk big picture now. What are the overall advantages of using a 1031 exchange for commercial property owners?
Well, the first and most obvious one is the tax deferral. We've talked about how much money that can save you, potentially hundreds of thousands of dollars.
Right, you can use that money to build wealth instead of paying taxes.
Exactly. And that brings us to the second advantage, wealth building. Deferring taxes means you have more money to reinvest, so you can potentially buy a bigger, more valuable property than you could have otherwise. Instead of having to pay taxes on your gains, you can use all that money to trade up.
So it's not just about saving money on taxes now, it's about boosting your potential for growth down the road. What about flexibility? Does a 1031 exchange give you any wiggle room to change up your investment strategy?
It does. There's a lot of flexibility. You can diversify your portfolio without a big tax hit. You could, for example, move from retail to industrial properties or even invest in a different part of the country.
That's great for long-term planning. What about from an estate planning perspective? Are there benefits there?
There can be. You can potentially defer those capital gains taxes indefinitely by continuing to do exchanges. And if you hold on to the property until you pass away, your heirs might inherit it at a stepped up basis, which means they could potentially avoid those deferred taxes altogether. That's a huge plus for estate planning.
Those are some pretty impressive advantages. But like any investment strategy, there must be some risks too. What are some of the things that commercial property owners should be aware of?
You're right, there are risks. The biggest one is the time pressure. Remember those deadlines? 45 days for identification and 180 days for closing. Well, if you miss those deadlines, you lose the tax deferral and you're on the hook for those capital gains taxes. It's serious business.
Yeah, you really have to be organized and stay on top of things. What other risks are there?
There's also market risk. You might feel pressured to find a replacement property quickly to meet those deadlines, but you don't want to rush into a bad deal. You don't want to end up overpaying for a property just because you're trying to avoid taxes.
So the tax deferral shouldn't be the only thing driving your decision.
Right. And then there's the complexity of the whole thing. The rules for 1031 exchanges are complicated. You've got to make sure you're doing everything by the book, working with a good qualified intermediary, and crossing all your T's and dotting all your I's. If not, you could end up with an IRS audit and potentially owe even more in taxes and penalties.
So it's not something to take lightly.
No, it's not. Another risk is liquidity loss. When you do a 1031 exchange, you're essentially trading one piece of real estate for another. That means your money is tied up in property, which isn't as easy to access as cash. If you need cash quickly, a 1031 exchange might not be the best option.
So it's a great way to build wealth through real estate, but it's not necessarily the most liquid investment. Now, let's talk about how someone like Cara Conde can help minimize these risks in the Indianapolis market.
Well, her experience and knowledge of the Indianapolis market are invaluable. She knows how to manage those deadlines so you're less likely to miss them. She also understands property values here, so she can help you avoid overpaying. Plus, she's got a network of trusted professionals like QIs and attorneys, so you can be confident that everything's being handled correctly.
So it sounds like having a seasoned guide like her can really make a difference and potentially save you a lot of headaches. Based on the guide, what makes Cara stand out as a top choice for handling commercial 1031 exchanges in Indy?
The guide really positions her as a 1031 exchange specialist. She's not just a general commercial real estate agent. She's been doing this for like a decade, hypothetically, of course, and has closed tons of 1031 exchanges successfully.
But it's not just about the numbers, is it? It's about how she works with her clients.
Exactly. She's known for being really client-focused. She really takes the time to understand each client's goals, whether they want cash flow, long-term growth, diversification, or whatever it is, and then creates a customized plan for them. She's not just trying to make a quick sale, she's in it for the long haul with her clients.
And her knowledge of the different neighborhoods in Indy must be a huge advantage.
Oh, absolutely. She knows all the ins and outs of the different areas, from Keystone at the Crossing to Fountain Square to Westfield. She knows what kind of properties are available in each area, what the market trends are, and where the hidden gems might be. She's got her finger on the pulse of the market.
The guide even shares a success story about one of her clients, right? Can you walk us through that?
Yeah, there's a hypothetical example where a client had a $2 million industrial site that they wanted to exchange. Cara managed to find three great mixed-use buildings for them within just 30 days, and then they closed on a $3 million property well within that 180-day deadline. The client ended up saving an estimated $400,000 in taxes. That really shows how she can get things done quickly and efficiently.
That's amazing, and it speaks volumes about her ability to make things happen under pressure. The guide also features a testimonial from a client, right?
Yeah, it does. A client is quoted as saying, "Kara's knowledge saved me $250,000 and landed me a better property." Short and sweet, but it gets the point across.
So what are the key things that make her such an effective partner for a 1031 exchange?
The guide highlights three main things: her strategic approach, her hustle, she's not afraid to put in the work, and her deep knowledge of the local market. That's a powerful combination.
It mentions some professional certifications she holds as well. What do those tell us about her qualifications?
She's a certified negotiation expert and a luxury home marketing specialist. That might sound more relevant to residential real estate, but it actually shows that she's a master of high-level marketing and negotiation. Those skills are just as important in commercial real estate, especially for complex transactions like 1031 exchanges.
And I'm sure technology plays a big role in her work too.
Of course, she uses all the latest digital tools and online marketing strategies to showcase properties and make the whole process more efficient. That can be a real game changer in a fast-paced market like Indianapolis.
The guide also includes a People Also Ask section that covers some common questions about 1031 exchanges. Let's run through a few of those. What kinds of commercial properties are eligible for a 1031 exchange?
The main thing is that the property has to be used for investment or business purposes. That's a pretty broad definition, so it includes things like office buildings, retail centers, industrial warehouses, shopping malls, even multifamily properties, as long as they're not your primary residence. The guide gives the example of swapping a Carmel office building for a mixed-use property in Broad Ripple, both for investment to illustrate that they're like kind, even though they're used differently.
Another common question is about the 45-day identification period. How does that work in real life?
So after you close on the sale of your property, you have 45 days to officially tell the IRS about potential replacement properties. You can usually choose up to 3 or more if their total value isn't too high. Kara's knowledge of the Indianapolis market, she knows about properties that are listed and properties that aren't even on the market yet, is really helpful here. She can help you find good options quickly, even with that short deadline.
A lot of people want to know if they can buy a property outside of Indiana. Is that allowed?
Yes, definitely. You can buy a replacement property anywhere in the United States. The like-kind rule is about how the property's used, not where it's located. So you could trade an office building in Indy for an industrial property in, say, Texas. No problem. Kara's done interstate deals before, so she knows how to make the process smooth.
What if you miss one of the deadlines? What happens then?
Uh-oh. If you miss the 45-day deadline or the 180-day deadline, you lose the tax deferral. You'll have to pay those capital gains taxes right away, plus you might even owe penalties. It's really important to stay on top of those deadlines, and Kara is great at helping her clients do that.
Depreciation is always a factor with commercial real estate. How does that play into a 1031 exchange?
So when you do a 1031 exchange, the taxes on the depreciation you've claimed on the property you're selling are also deferred, not just the capital gains. But they don't go away completely, they carry over to the new property. Kara can advise you on strategies to minimize those taxes in the future, like maybe holding on to the property until you pass away so your heirs can benefit from a stepped-up basis.
Last but not least, why should someone hire a real estate agent for a 1031 exchange instead of going it alone?
Well, like we've been talking about, it's a complex process with a lot of rules and deadlines. An agent who specializes in 1031 exchanges, like Cara, can really help you navigate all of that. They know the ins and outs of the IRS regulations, they have access to a wide range of properties, they're experts at negotiation and due diligence, and they can keep you on track so you don't miss those crucial deadlines.
So it's about turning what could be a complicated, risky situation into a smooth and profitable experience.
Exactly.
All right, so to sum it all up, a 1031 exchange can be a really powerful tool for deferring taxes, growing your wealth, and making smart investment moves, especially in a market like Indianapolis.
For sure. Indianapolis has a lot to offer in terms of affordable commercial properties and a strong economy, which makes it a great place to consider 1031 exchanges.
But the key is to do it right. You need to know the rules, and you need to have the right guidance.
Absolutely. And as we've seen, someone like Cara Conde can be an invaluable partner in that process.
So if you're a commercial property owner in the Indianapolis area and you're intrigued by the possibilities of a 1031 exchange,
Think of your next investment move as more than just a transaction. It's a chance to upgrade your portfolio, defer taxes, and really achieve your financial goals in commercial real estate.
great insights. Thanks for joining us. We'll see you next time on The Deep Dive.
See you then.